What's going on, guys? My name is Richard and welcome back to another stock market outlook video. Last week I was dealing with finals, so that's why I wasn't posting too frequently, but now that the semester is finally wrapping up, I'll be posting a lot more videos for you guys in the coming months. But anyways, let's take a look at the indexes and starting with the NASDAQ on a weekly time frame to get some perspective. And overall, we are above a rising 30-week moving average. That's this red line right here. So we are in a stage 2 from the Stan Weinstein methodology. And taking a look at the weekly bar, you can see overall a consolidation week where we gap down slightly, but overall only changed 0.73% throughout the week. And you can see volume was slightly higher than the previous week, but because we didn't close near the lows, I take this as a positive. And I think we needed a consolidation after this big breakout of 5.76% the prior week. However, taking a look at the S&P 500, it kind of tells a different story because we're still in this consolidation right here and we are below a declining 30-week moving average. So this is a stage 4. That's not when you want to be investing in companies in this index. But overall, we're still in a consolidation, as I said, and we gap down slightly, but overall closed right near the kind of middle of this wick right here. So not the worst thing in my mind. And once again, if this starts participating, that's when I think this would be become a easy dollar environment because we've got broader participation in the rally. And finally, taking a look at the Iwm, the Russell 2000, it kind of tells a similar story to the SPY. We are below a declining 30-week moving average. And to really get aggressive, I want to see this start moving up and challenge this 30-week moving average and potentially form a stage 2 uptrend. And overall, we had a gap down, but once again, a close near the middle of the bar. So overall, a positive, still consolidation. But as I said, I want to see this move upwards and join in on this rally. So now let's go back to a daily chart and check out the NASDAQ day by day. So overall, these 5 bars are this week's action. We had a nice Monday after a gap down. We finished right near the highs, which is very constructive. But on Tuesday and Wednesday, we had that brief pullback that I mentioned was a possibility last week. So Tuesday, you can see we gapped up, but then closed right near the lows. So this is probably the worst possible day, especially since it was on higher volume. And that action continued into Wednesday, where we had a slight gap up, an attempt to break upwards, but then we finished not too far near the lows, but still in that lower third. So this is once again a negative day, but the end of the week was strong. You can see that on Thursday we had a gap down, a move downwards, but then a strong rally right towards the end of the day where we closed right near the high. So this is a great bar. And this was, once again, a signal for me to look to add on potential longs. Then on Friday, you can see we had another strong day. After we gapped down, we had another push right near the end and closed right near the high. So overall, strong action on the week. We reclaimed that 9,000 level on the NASDAQ. And the expectation next week is that we continue higher. And now moving on to the FFTY, which is the Innovator Ibd 50 ETF. It looks very similar to the NASDAQ and is actually a little bit stronger for the week as it was up 0.25%. So once again, there's an indication that growth stocks at this time are working and truly this is a stock picker's environment. And taking it day by day, once again, it reflects the NASDAQ pretty well. Down days Tuesday and Wednesday, but then a strong end to the week on Thursday and Friday. Moving on, let's take a look at the VIX, which shows the volatility in the market. And as trend followers, I want this to be low because that makes the trends just clearer and overall there's less risk in the market. And you can see it's kind of the inverse to how the NASDAQ acted. It was up on Tuesday and Wednesday, but we dropped back down on Thursday and Friday. I would like to see this continue lower because you can see we moved up from the low of the previous week. And as low as I can get is the best environment for me. And finally, let's take a look at gold and the XLF, the financials. Starting with gold, you can see it had a breakout on Friday, although it did kind of form a hesitation bar right here. But you can see a nice overall uptrend above the 10-day, 30-day, and 50-day moving averages. So this is probably one of the reasons why gold stocks are doing so well at this point because the overall value of gold is going up. And to round off the indexes, let's take a look at the financials. It's always good to check up on how the banks are doing. And overall, you can see we are still in a downtrend. You can see it's still challenging that 50-day moving average, which is this green line right here. But we had a nice Bollinger Band bounce right here, and also kind of a consolidation bar on Friday. So once again, it would be constructive if the financials joined in on this rally and participated. So that is how the major indexes are doing, and that's kind of just a brief look at the overall market. And now let's talk about my previous watch list and how it performed. So overall, we had 9 out of the 13 stocks make gains from the open to the close last week, which is pretty good. But we didn't have any substantial gains this week. The best performer was Vertex, which was up 6.35%, and it was challenging for new highs on Friday. Netflix also made new highs on Friday, and it's been just kind of inching up, and I'm looking for a strong breakout on volume next week. Our worst performers down here were MRCY, which just kind of faded down, not on high volume, so this is kind of constructive if it forms a right side to this and breaks above this pivot right here. But overall, this still needs work and time. Our worst performer was TER, or Teradyne Inc. And once again, this is just moving down, although on higher volume. And these are all kind of bad bars, because you can see that just like the indexes, we can kind of tell what is a good bar and bad bar by the overall pattern. And you can see right here, the close is right near the low, closes right near the low, closes in the bottom third, and closes right near the low after an attempt to break upwards, but it fell right back on higher volume. So this is a bad pattern overall, and I won't be looking at this stock next week. But overall, a decent performance, especially since we had a bad Tuesday and Wednesday. So overall, I'm not disappointed in how my watch list performed, and I'm looking for Vertex and Netflix to make a move upwards next week. So now we've talked about the major indexes and my watch list, let's go ahead to the big picture from Friday and talk about IBD's take on the market. So overall, you can see that the stock market is climbing a wall of worry, as it always does. And overall, you can see that they talk about how large funds took advantage of the weakness last week and bought a bunch of stocks. And on Friday, we had a 1.4% sell-off at the beginning, but we turned that into a gain at the end with some strong momentum into the close, as we saw from this previous bar. So going back to the index real quick, you can see that we had a big gap down on Friday, but we had a strong closing. And taking a look at the 65-minute chart, you can see a strong end to the day, which is exactly what they're talking about here. And anyway, you can see how on Thursday and Friday, the gains were not enough to wipe all the declines for the week. And they also talk about the weakness in the small caps. Yeah, moving on, we've got, they talk about sideways motion in the S&P 500 that we also saw. And they also talked about some strong stocks like Chegg, Fortinet, and Twilio. And overall, we are in a confirmed uptrend. We had a solid reversal up on Friday, and we have 1 distribution day on the NASDAQ and 3 on the S&P 500. So that is the big picture. And now moving on to the Wishing Wealth blog, you can see that the current GMI is a green signal. That's good to see. And also, Dr. Wish talks about some recent green line breakouts in Logitech, and he's got a couple others listed below as well. So overall, my take is that we're still in a confirmed uptrend, although I do want to see some more participation from the small caps in the Russell and also in the financials. But overall, I'm still bullish at this point. I'll be looking to add more longs next week. So thanks so much for watching. Please leave a like down below if you enjoyed, and I'll see you guys in future videos.